Hey, Saretsky here. Lots to touch on this week. We had an update on Canada's CPI inflation. We've got some comments from the Bank of Canada. We've got a huge federal budget announcement, and its implications on the housing market are profound for reasons that you're probably not expecting or anticipating, and I'm going to dive through those. So again, now if you're an Airbnb investor or user, I highly encourage you to check out this video because I have some very, very important commentary on that. And I'm going to walk you guys through what's happening in the housing market, particularly on the housing supply side, and then really the conversations that I have behind closed doors and kind of walk you through some of that conversation. So if start off this week, Canada's CPI headline inflation coming in at 3.1%, actually slightly below expectations. But again, some relief as after seeing inflation creep back up into the fours, now falling again back down, and as we're now at 3.1. Now, the biggest driver of this, of course, people are going to argue about, hey, inflation, prices are still expensive. We know that. We're kind of looking at the rate of change and how this is going to impact the Bank of Canada's decision-making process moving forward. So, yes, a huge reason for CPI declining, of course, was gasoline prices, and one of the largest reasons why it still remains elevated today is mortgage interest costs. Mortgage interest costs are running at 30% growth on a year-over-year basis, and this is feeding through. That combined with rent prices are feeding through to almost half of the increase in CPI inflation. So this really is basically what we're saying is the housing market, the intricacies of the housing market and the mortgage market are basically what's impacting inflation as of right now. So we should really unpack those things a little bit further. I would argue that mortgage interest cost is likely to stay elevated. And the reason for this is because, as we've talked about in these videos in the past, by the end of this year, by the end of 2023, less than 50% of Canadians will have seen a mortgage payment increase. And again, the reason for that is because at the end of the day, a lot of people are on fixed rate mortgages, right? So if you look, the Bank of Canada has some really good data on this. They've got a chart here which shows the uninsured mortgages. So uninsured mortgages, the 5-year fixed rate. What is the market paying on that? So today you're paying 5.68%. That's the Bank of Canada sort of average of what people are paying on mortgages outstanding, new issuance. So you're looking at a 5-year fixed rate today at about 5.68%. The market, the outstanding interest rate on 5-year fixed rate mortgages. So all these people that have mortgages, they took them out a year ago, 3 years ago, 4 years ago. The average is at 2.89. Okay, so we're at 2.89 and the gap now is 5.68. So assuming all these mortgages, again, as they start turning over more and more each month, that would be about $70,000 a month in 2024. You would logically conclude that's probably going to keep your mortgage interest costs relatively elevated moving forward. So I think that's an important distinction now. And this also comes on the heels of the Bank of Canada's comments. The first comments from Tiff Macklem after he moved to the sidelines about a month ago, or after the last ongoing rate pause. He says, interest rates at today's levels are likely sufficient. And he says, quote, that there's more tightening in the pipeline. And again, this is what he's referring to, right? Again, less than 50% of Canadians have seen a mortgage payment increase. This is arguably most households' largest single ticket item is your mortgage payment. To keep a roof over your head and over your family's head, your mortgage payment is a pretty large chunk of that. So as those mortgages again come up, that's what he's talking about, more tightening in the pipeline. And so this all leads us now to the federal government's budget, right? And everyone's saying, okay, what to do about housing? Prices are coming down a bit in parts of Canada, but mortgage rates are so high. The housing unaffordability has never been worse. Rents are sky high. They're not really coming down. And so we've got this housing crisis. And look at the polls. The polls aren't looking too good. The federal government's got to do something. Okay, let's update the budget. Let's make a big announcement. Let's take some photo shoots. And so they've announced more federal funding for rental housing. And the big one is the Airbnb ban. Okay, so what they've done is, if you're here in BC like I am, is the BC government came out 2-3 weeks ago and saying, we're effectively banning Airbnb unless it's your primary residence. So we're going to supersede the municipal governments. We are going to set a law in this province that says if you want to do Airbnb, it must be your primary residence. If not, we are going to fine you, and we are going to be very, very aggressive with it. Fines, I believe, up to $50,000. Again, those aren't quite set yet, but they're working on the legislation at the moment. And so the federal government then comes out a couple of weeks later and says, okay, yeah, we're also going to jump on the bandwagon here. And if you are an Airbnb operator, investor, you're not going to be able to deduct the expenses off of your rental property, okay, right? So if you're an Airbnb operator, you collect all this revenue that comes in from the Airbnb, and you have expenses. So you write off the mortgage interest costs, your mortgage interest. You probably write off, your strata fee or part of your property taxes. You might write off, your cleaning services. You might write off, marketing or advertising you have to do for the Airbnb. Maintenance on the property. So all of these things, right, which help you bring down your revenues so you pay less taxes at the end of the day, like any rental property, you can no longer do that. And so they're making the financial equation of operating Airbnbs not attractive at all. And so the biggest implication of this is that most people aren't aware. I don't even know if the government is, or maybe they are and they just really want the tax dollars, but as it stands now, if anyone's operating Airbnb, I'd highly encourage you to have a conversation with a chartered accountant, okay? So when you're operating Airbnb, you're technically operating it as a commercial property. If you're operating Airbnb full-time as an investment property, it's in CRA's eyes, it's deemed as a commercial property. So if you say, okay, man, these new rules really suck, I got to abide by them, so I'm no longer going to Airbnb, I'm going to convert this now to a long-term rental. I'm going to go get a tenant in there, I'm going to sign a 12-month lease and have it rented out to this individual. You're now converting the property from commercial to residential. When you do that, you now must self-assess GST, and in cases like Ontario, you got the HST on top. So for example, if you have a property that when you started Airbnb-ing it, it was worth $1 million. Now you're converting it back to a long-term residential rental property, and it's still worth $1 million. There's a 13% tax that is self-assessed on that. So you basically owe the government, you owe CRA $130,000. Okay, now again, this is not going to be in every example, but this is actually going to be pretty common, and a lot of people are going to get tripped up, and most people have absolutely no idea. And I know that for a fact because I work in the industry. I talk to realtors that actively sell Airbnb investments to their clients. I've never been a huge proponent of it because the writing has been on the wall for years and years and years that government hates this kind of activity, and it's only a matter of time till people clamp down. But most people don't understand the tax implications around Airbnb. So that's the big thing. The other thing is from the policy perspective. Krista Freeland, the finance minister, is saying, okay, guys, investors are bad. We're going to go after them. We're going to fix this thing. And so she believes, this is her math, she believes that by implementing this tax policy, it should alleviate, or it should bring to market 30,000 units in this country. So 30,000 new homes, or that were once as Airbnb properties, are now going to enter the long-term rental market or the resale market, but it's going to free up 30,000 units. Well, I just want to break that down for you because that sounds like a decent amount. This is like a one-time thing, right? Like that's a one-time 30,000 homes. Right now in Canada, we're growing our population by about 1 million people a year, right? We're adding 1 million new people into this country. We're building about completions, right? Like you can start housing, but you got to complete it. Over the last 10 years, we've averaged just over 200,000 new homes per year. 200,000 new homes per year. Now keep in mind, I think this year we'll probably hit about 220,000, right? So let's just keep the numbers relatively simple. So we're going to complete 220,000 homes this year. We're going to get a 30,000 increase from Airbnb. So net, we're at about 250,000 homes, new homes coming to the supply of the market. But you're adding 1 million people a year. So there's still this very large imbalance that at the end of the day, that imbalance is so broken, and kind of leads me into the next conversation, which is the conversations that I'm having behind closed doors. You know, you go for beer and you meet with some of the largest developers in the city. I mean, this is ultimately, I think one of the coolest things about this channel and the newsletter and all the social media and stuff that I do is it does open up doors to conversations with very interesting people that, you know, they want to share knowledge. They want to share, their thoughts about what's happening in the market, and people want to network. And so, you're able to sit down with a beer with some of the largest developers in the city and say, okay, what's your perspective? And so I love just getting different perspectives in the room and saying, okay, and the biggest takeaway that I can really try to emphasize here is that new development does not pencil today. New development, for the most part, does not pencil today. Okay, the fact with rising construction costs, rising interest rates, surging interest rates, the volatility in the market, nobody is willing to build today. Okay, I'm telling you, like there are examples that, and like you can multiply this because these are the same conversations you have every time, where developers they acquired land 10, 12, 15, 16 years ago. And even though they bought it that long ago and the land has gone like this, you still can't build on that land today and make the numbers work. Okay? Like this is fundamentally the truth. So you can have guys like Sean Fraser, the housing minister, and all these levels of politicians telling you how much new housing they're going to work and build to market, but like it's not getting built. It will not get built. So the next 12 months are a write-off. Again, I don't know where interest rates are, where they're going to be 2 years from now. I don't know where construction costs are going to down. But unless you think both of those are going to fall and rather aggressively, just new housing is not going to pencil. So you don't have the ability to ramp up housing completions. And so this is the biggest challenge, is that I just think adding supply to the market is going to be really, really hard to do. And so when you start unpacking this further, you go, okay, well, if we can add the supply that we can add today, there's another thing that I call, the gap, right? Which is the gap between pre-sale prices, right? So I'd call that your future price, your pre-sale price. I'm going to pre-sell this unit and deliver it to you in 4 years. The pre-sale price versus the resale price, the spot. So, financial markets, right? You got your future price, you got your spot price. The gap between that is massive. It's probably the widest that it's ever been. And so, right, so think about this. I'll give you an example. Let's use downtown Vancouver as an example. You'll never see a developer, I don't think you'll ever see a developer pre-sell below $1,700 a foot. Cannot be done. Can't be done. The financials of it you can't sell below 1,700 a foot. The resale market's at about $1,250. It's like a newer construction condo, decent medium range quality. Okay, maybe $1,300. Let's call it $1,300. You can't pre-sell below $1,700, and I would say most are kind of pre-selling around $2,000 a foot. But some developers can get it down to about $1,700, right? Again, depending on the project. So you use $1,700 and $1,300. So you got a gap. That's a huge gap, a $400 a square foot gap. So there's two things that have to happen. Either the resale prices have to come up at some point, and that might take a year. It might take 10 years. But at some point, the gap has to narrow, or the market has to continue to buy at $1,700 a foot and fund the new supply to come to market. because they can't get the cost. Like I said, unless your construction costs come down materially, we automate using AI and robotics the building of housing. I'm not necessarily convinced your plumber or electrician are take a lower wage. So you have this huge gap, and this is kind of like a natural throttle on new housing supply. This is just the reality. You can agree with it, you can disagree with it. This is the reality. So there's this throttle on new housing supply. And so this is kind of what I'm looking for moving forward. And this is why, I always kind of laugh and call it the politicians. They're trying to do their best. They mean well in most cases. But the realities of like on the ground and how the real estate market actually kind of works, that's how it works. And so, either either the resale market's going to have to catch up, or there's going to have to be a lot of investors that have huge stomachs to pay, 20+% above resale pricing to fund that new housing supply to come to market. Otherwise, if people aren't willing to pay that 1,700 foot because they don't like the outlook and the prospects of the market, that housing supply does not get built. So, again, in my view, this is also why I think that pre-sale buyers are probably going to be the losers over the next decade. So they were like the winners over the last 10 years, and I think they're going to be the losers over the next 10. So for the most part, people buying pre-sale, while there will be some money to be made, the gravy train that was 10 years ago, I don't see that. I think that you're going to underperform over the next 10 years. So as always, I hope that helped. There's kind of a lot to unpack there. Again, if you're running an Airbnb, I feel sorry for you. There's a whole lot of other implications that I'm not going to be able to get to in this week's video, but I'm sure we'll touch on those again. As always, hope to help. See you next week.